Financial planning covers. Note: disclaimer. The contents of this publication do not necessarily constitute or imply its endorsement, recommendation, or favoring bias. This publication is meant for general reading and educational purposes only. The statements, explanations, concepts are of general nature and may not have taken into account the particular objective, move, aim, need, circumstances of the individual user, reader, organization, institute. Thus, we do not assume any responsibility for any wrong move or action taken based on the information available in this publication. Thus, we do not assume any responsibility for any wrong move or action taken based on the information available in this publication. Therefore, before acting on or following the steps suggested on any theme, or before following any recommendation given in this publication, user, reader should consider, seek professional advice. The publication contains information, statements, opinions, statistics, and materials that have been obtained from sources believed to be reliable, and the publishers of this title have made best efforts to avoid any errors. However, publishers of this material offer no guarantees and warranties of any kind to the readers, users of the information contained in this publication. Since the work and research is still going on, we do not warrant the totality and absolute accuracy, adequacy, or completeness of this information and material, and expressly disclaim any liability for errors or omissions in this information and material herein. We do not accept any legal liability whatsoever based on any information contained herein. Hello everyone. Financial planning is the process of managing your money to achieve life goals, such as education, buying a house, or retirement. It helps you balance income, expenses, savings, and investments in a structured way. In this video, we will understand the financial planning process and how to make smart investment decisions. Financial planning is a systematic approach to managing finances to meet short-term and long-term goals. It is not just about saving money. It is about planning how to earn, spend, save, and invest wisely. Financial planning begins with understanding where you stand financially and where you want to go. Let's look at the process step by step. Determine your current financial situation. Start by analyzing your income, expenses, savings, assets, liabilities. This gives a clear picture of your financial health. Next, define what you want to achieve financially. Goals should be specific, measurable, realistic, time-bound. Examples include building an emergency fund or planning retirement. 5-step approach to achieve financial goals. Step 1. Identify specific financial goals. Clearly define your goals, such as buying a car, higher education, or wealth creation. Specific goals make planning easier. Step 2. Classify goals. Divide goals into short-term goals up to 3 years, medium-term goals 3 to 7 years, long-term goals more than 7 years. This helps decide investment strategies. Step 3. Decide asset allocation. Asset allocation means distributing investments across different asset classes such as equity, debt, and cash. The right allocation depends on age, income stability, risk tolerance, financial goals. Proper asset allocation balances risk and return. It helps protect investments during market fluctuations while allowing growth over time. Step 4. Choose the right investments with diversification. Select investments carefully within each asset class. Diversification means spreading investments across different instruments to reduce risk. Example: investing in multiple sectors instead of only one. Diversification minimizes losses if one investment performs poorly while others perform well. It is often called the rule: don't put all your eggs in one basket. Step 5. Review and revise financial plans. Financial planning is not a one-time activity. Regularly review your plan to adjust for income changes, market conditions, life events, new goals. C. Choosing investment options and understanding risk. Different investments carry different levels of risk. Before investing, consider investment duration, risk tolerance, expected returns, financial goals. Choosing the right option ensures comfort and stability. D. Returns from investment. Returns are the earnings generated from investments. They may come as interest, dividends, capital appreciation. Higher potential returns usually involve higher risk. E. What are risks and returns? Risk refers to the uncertainty of investment outcomes. Return is the reward earned for taking that risk. The key principle of investing is higher risk generally offers higher potential returns, while lower risk provides more stability. A balanced approach helps achieve long-term financial success. Financial planning helps turn dreams into achievable financial goals. By understanding your situation, allocating assets, and reviewing plans, you can build a secure financial future. This real-life video footage, published only for the purpose of educating the public by making them understand how the real-world situation will be. We are not providing any buy or sell advice in this video. Technical Charts Official is not responsible for any losses or profits resulting, directly or indirectly, from the information provided. Please consult your financial advisor before buying or selling. Start planning today for a better tomorrow. Thank you for watching. Follow for more.